ALE Property Group is Australia's largest listed freehold owner of pubs with some 86 establishments all over the country. I'm John Treadgold, and joining me today at the ASX Investor Series is the company's Managing Director, Andrew Wilkinson. Andrew, welcome to FNN.
It's my pleasure, and I'm pleased to be here.
Your interim distributable profit was $14.4 million. What drove the growth?
Well, the first point to be made is the $14.4 million hit the market's expectation and all the guidance we'd provided. The moving parts are very few. We receive rent. That rent increased by about CPI. The other major part is interest expense. We saved significantly off the back of a refinancing we completed in May 2014, some $7 million per annum in interest cost reductions off the back of that refinancing. We've now got a very secure position, and that delivered that $14.4 million to our 5,000 security holders on a 100% tax-deferred basis.
The key revenue source for ALE is rent from the leasing of pubs. Can you help our viewers understand the company's structure a little better?
As you introduced, we owned 86 pub properties all around Australia. If you go back to 2003, Foster's owned a very large pub property portfolio and pub operating business. They were spun into two different IPOs. The properties into ALE and the operations into ALH. ALH was subsequently taken over by Woolworths and is 75% owned by Woolworths today. So in essence, there was a long-term lease established between the two organisations such that we, ALE, receive rent monthly. It increases annually by CPI. It's very straightforward. And in the future, there are market rent reviews in 3 years' time, where it can increase or decrease by 10%. And in 13 years' time, 2028, it can increase or decrease by an unlimited amount.
And the Australian property sector is a bright spot in the business landscape. How has the pub sector specifically performed?
Perhaps if I go back to 2007, just before the global financial crisis, our cap rates were in the mid-sixes, or our yields. And through the GFC, they were pretty much unchanged through that time of extraordinary volatility. If you look to other sectors like office, retail and industrial, they all spiked up in response to that volatility. But we, with the long-term leases to a very secure tenant, were very stable all through that period. So when I look at the property valuation space for pubs today, in our part of the investment grade pub space, it is still very stable off the back of the very stable cash flows we have. If you look to other types of pubs, they've improved in value. Again, the non-investment grade pubs increased in cap rate or reduced in value during the GFC, but they've now started to recover. The overall story for ALE, or investment grade pubs, is stability through all cycles of the economic cycle.
And looking at gearing, what sort of levels are you at, and what do you see as the optimum level?
ALE's gearing is around 50%. Now that's higher than other property trusts, no question, but it has regard to the very long-term, secure income streams that we have and the high-quality properties we have throughout Australia. Our pubs have been operating for more than 60 years in their current locations, and many of them are icon hotels. So we're at 50%, we're probably at the lower end of our range of 50 to 55%, and we feel very comfortable about that, particularly off the back of a refinancing we've just done, which sees our funding term at around 6 years today, and we've got our base interest rates on all of our debt hedged for the next 8 years. So our overall capital structure is now very sound indeed, long-term, hedged and low cost.
So you've talked about the value of the stability in the organisation. Do you see that continuing into the future?
I mean, the essence of the ALE model is that we receive 12 rent payments a year, pay 2 interest payments and pay 2 dividends. That's the essence of the model. And our challenge is to keep that very simple and secure model in the space it's in today. And that requires discipline. With interest rates falling to the levels they are, we are starting to witness others overpaying for assets, but ALE's trademark has been its discipline and its focus on absolute quality and security. That's where our future will go, and we believe that'll be the best way to protect our security holders' position.
And for investors interested in the company, what should they focus on for the next 12 months?
The current position of ALE is the distributable profit forecast we've given, the distribution forecast we've given, yields around 5% on the current security price. That's around 100% tax deferred, and that's very attractive for individual investors. But over the last 11 years, we've turned $1 including reinvested distributions, into more than $10, or a 22% return per annum each year compounded over that 11-year period. So that's seen as outperform many other property trusts in the sector. The challenge for us will be to continue that performance, and we'll be doing everything we can as a management team and board to ensure that outcome is repeated year after year.
Andrew, thank you for joining us on FNN.
Thank you. I appreciate the opportunity.